It's poppin', world. It's your boy G. We back at it with another episode of the DIGI MULA Show, where personal finance is the new culture. This episode, we're going to talk about a lot of big money moves that's been shaking up the world, from the Trump tariff tax to the U.S. stock market crash. And I'm also going to explain the difference between individual stocks and indexes. Let's get straight into it. All right, guys. So we're going to kick the show off from an important date that I left you guys with last episode, April 2nd, quote unquote Liberation Day. April 2nd became a historic day in modern times. It's when US President Trump, aka Donnie, put a tariff tax on the entire world. You guys may not know what a tariff tax is, so that's what I'm here for. I'm going to break it down for y'all. So let's kick it off with the question of the week. What is a tariff? A tariff is a tax that a government will put on foreign countries to import their goods. It makes foreign products more expensive and encourages the country to buy domestic. So a government will usually put a tariff in place to regulate trade, protect domestic industries, and to increase the revenue in the country. In my man Donnie case, he's putting additional tariff tax on foreign countries to challenge the trade practices that has been set in stone for many decades. Donald Trump considers the tax that other foreign countries put on America to be unbalanced and unfair. So he imposed the additional tariff tax to the foreign countries with some type of correction for the imbalance that he believed is happening in the world of trade. To break down how a tariff works in a real life situation, here's my example. So let's say an iPhone costs $1,000 from Japan. The US put a 24% tariff tax on Japan, which turns that $1,000 iPhone to a $1,240 iPhone, which is an additional $240 for each iPhone. So let's say a same $1,000 iPhone was made in the US and the US sell it for $1,100 instead of $1,240. That what makes the product seem cheaper from actually importing the goods from Japan. All right, so let's break it down to a bottom line. Tariffs equals taxes on imported goods, and imported goods equals higher prices for foreign products. So that means that any product we import from other countries outside of America is going to be taxed. So that's the new iPhone. That's your favorite tequila from Mexico. That's anything you get from Taiwan. That's anything you get from China. That's Temu prices going outrageous. All right. So that is Tariff 101, broke it down by your boy G here at the DIGI MULA Show. So Trump tariff tax is the cause. The effect from that tariff tax that Trump put on the other countries is the US stock market crashing for 2 days straight. We got to talk about it. In 2 days, the stock market nearly lost $5 trillion. Yeah, you heard it right. $5 trillion. That's 1 5 and 12 zeros. This has been the largest stock market crash since 2020. Y'all remember 2020 when the COVID-19 pandemic hit the streets? That's the last time we seen a crash like this. So what causes the stock market to go down? I'll tell you. It's one word: uncertainty. Uncertainty in the stock market means that the companies cannot predict the future. They don't have no direction to go. So the global imbalance, from the war to Trump tariffs to tech layoffs to the United States laying off thousands and thousands of employees, it causes the investors to get spooked and panic sell. So a panic sell is when investors hear bad news, and when they get fearful a lot, they just sell. No matter how low the price is for the stock, they're going to sell and just get up out of there with their money, with the little money or the lot of money they had from whatever price they sold it for. So with the stock market being crashed, that means 401ks lose value. That means indexes like the S&P 500, the Dow Jones, they lose value. In addition, startup companies run out of money because there's nobody investing into the company to help it grow. So with that being said, assets like physical gold, physical silver, and cash on hand becomes a safe haven against the falling stock market that we see today. Me personally, I did not sell any of my positions that I had in the companies that I am invested in. I believe that the stock market will go up eventually, and right now is just the perfect time to buy. So, like I said, cash on hand becomes a safe haven. So, if you guys have any cash on hand, have some extra bills to play with to invest in the stock market, I would highly, highly recommend you guys look into some stocks or look into some companies that you guys always wanted to invest in that you guys thought was too high of a price. Now is the time to invest in. All right. When there's blood on the streets, it's time to eat. The big dogs eat when there's blood on the streets. So if you guys see the market bleeding, red, 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 man, it's time to get fed. It's time to eat, man. Big dogs going to eat in situations like this. So when you see other people fearful, that's when you need to be greedy. All right, guys. So this topic means a lot to me. I'm here to break down the difference between individual stocks and indexes. All right. So let's look at an individual stock as a player on the team. So for this example, I'm going to use basketball players as an example for individual stocks. All right. So let's say LeBron James is Tesla. And let's say that Kobe Bryant is Microsoft. And for the last example, let's say Michael Jordan is Apple. Right? So those three individual players and three individual stocks. Okay. So let's say that those three individual players is on a team, and the team is called S&P 500. The index will be the team, and the individual players will be the stock. So when there's a bunch of stocks represented as a team, that will be the entire index. So hopefully that breaks it down in the simplest terms that you guys can understand. So the S&P 500. The S&P 500 is the top 500 companies. The NASDAQ. The NASDAQ is the top tech companies. The Dow Jones. It's the 30 major industrial companies. So indexes are the teams and individual stocks are the players, okay? So when you put multiple individual stocks, that becomes the index. So I'm gonna break it down to you guys again. The S&P 500 is the top 500 companies in the country. The NASDAQ. The NASDAQ has some of the heaviest tech companies inside that index. And the Dow Jones. The Dow Jones is the 30 major industrial companies in the United States of America. Individual stocks is one company. So let's say Apple, Tesla. You're betting on that one single company performance when you buy the stock. So when you buy individual stocks, it's high risk, but it's also high reward. On the other hand, indexes. Indexes is multiple companies balled up in one group. So it'd be the top 500 companies, which is the S&P 500. Then it would be the top 30 industrial companies, which would be the Dow Jones. And last but not least is the NASDAQ, which holds a group of some of the major tech companies in that one index. Indexes are more diverse and stable, and it protects you against individual stocks. So let's say that you invest in Apple, and Apple goes down, like major. If you invest in the S&P 500, Apple is a part of that, and the S&P 500 can still go up because Apple is one company. It's 499 more companies a part of the S&P 500 that can cover up any losses that Apple may have for that day, week, or month. So for the example I put earlier in the topic, a single player is one stock, is an individual stock. The entire team is the index. All right, y'all. So that's a wrap for today's episode. Episode 10 of the DIGI MULA Show. I had an amazing time shooting this one. If you guys got any information or value from today's episode, please like, share, and subscribe. If you guys have any questions or want me to cover a topic next episode, hey, leave a comment below. Hit me up on any one of my social handles. Like I said, it's your boy G, and this has been episode 10. We made it to the double digits, y'all. It's nothing but up from here. All right? Until then, y'all stay sharp. Y'all stay on the money. I'll see y'all next time. Peace. Hey, look, I forgot to do one of the main important segments as I was shooting this show. So this stock pick of the week is going to be hidden. It's going to be special for y'all because this is one of my favorite stocks that I actually invest in. All right. So the stock pick of the week is going to be TSM, Taiwan Semiconductor Manufacturer. TSM is one of the leading semiconductor chip makers out there. They produce chips for your iPhone, chips for AI products, and chips for some of the new technology that's going on in vehicles today. TSM is currently priced at $144 per share. And I'm telling y'all, man, once the market reverse and start going to that bullish momentum wave, it's over. TSM was going to be one of the leading stocks that just take over everything. Mark my words. So TSM is stock pick of the week. If I was y'all, I'd copy by a boatload. See y'all next time.